Hello, I'm David Butcher, Managing Director of Communications and Content, and I'm joined here by a good friend of mine and former colleague, Ed Protheroe. Welcome, Ed.
My pleasure, David.
So Ed runs a really interesting consultancy called Parkview Capital, and Ed, we've been talking about crisis communications, and one of the things I thought was really interesting is what happens after a crisis. So we hear lots of examples, you see lots of examples, there are some today, of companies that have performed poorly, but you hear fewer examples when companies get it right. I know you've got an interesting story to tell here.
Yeah, that's a really good point. I think it's an interesting one to look at, and the one that I cite, a case study that I cite when talking to clients, is one that we worked together on roughly 10 years ago, a little bit more, 2007, 2008, with the global financial crisis around that time, and real estate funds that I was working with then. A particularly challenging time for them as well. And interestingly, at that time, it was, if you remember, a relatively new asset class for investors, of course. So they hadn't been through the market cycle with property funds at that time, up until then. And so it was particularly challenging for them as well. And it's very easy, I think, when times get difficult for fund managers to put their heads down and really focus on actually just getting through that particular issue. But we were very clear in our communication strategy what we wanted to do, and that was to actually get out and communicate more, get out and talk to clients. And I don't mean selling the funds, but actually just putting out educational pieces and updates, spin-free guides, things like that, talking to people through the market cycle, what we had seen before, what they can expect to see going forwards, and telling them, just being open and transparent and honest with them about how things currently are. And I know that they were very appreciative of that.
Right, so you communicated more. And what was the impact? I mean, what was the commercial impact of that sort of redoubling of efforts?
Yeah, absolutely. Well, at that time, it was, I think the fund management industry has got better over time at talking to their customers. But at that time, certainly, there were those that didn't do terribly much at all. Those that did, but perhaps not as extensively or as well as we were communicating. And so it was a key differentiator for us. So when we came out of the market cycle through 2009 into 2010, money started coming back into the asset class. What the commercial benefit was for us was that we were taking around 45% market share, and I'm convinced that was a product of our communications beforehand, helping people all the way through, and that was they really trusted us, and so we became effectively the default property fund to buy for a lot of them. So it really worked.
That's remarkable. Thank you. Thanks for sharing that. No problem. And thanks for watching. If you want to get in touch, give us a shout. Thank you.